Hello guys, so this is gold. This is good. So I'm trying to see. I'm trying to see where we can get into the market, see to analyze the new week. This is the daily chart. So this is the daily chart. I'm trying to see. What I can see here is last week we were able to take the sell side liquidity as highlighted in my first video of this channel. Yeah, we can see that price did take this sell side liquidity, and yeah, we're looking for price to give us a good premium price to continue selling. Wanted to see gold to get to this point here. Yeah, to this point here, but then that depends on what price give us the price action for next week. So I'm not going to really say much, but these are the very first points I'm looking out for. This order block here, and also this fair value gap. So I think I'm bullish for now on gold. We can see go down to the weekly. Yeah, so I'm actually looking into this fair value gap, and we also have some regular ones here as well, and as well this one, but I am looking for price to get to this first. I really do not care about price going all the way down. If I want to see sell side, I just wait for it to get to a particular first point I've highlighted. That has to do with my time and price. Wait for the key zones for either the London section or the New York section. So basically that is it. Going down to this particular point, I just want to show you something here that happened last week, right? We can see price bought up and it took this high. To me, here is a break in market structure. We can see price taking this high shows the essence of the direction of price to keep buying higher. And what did you do? If you remember, or rather, I remember doing my study with RCT's mentorship. He always make sure he pointed out that when price takes out a high, look for a fair value gap around there, and if your bias is correct or your bias is very very good and fine, you can as well buy up, and depends on if the price there gives you a premium, you always buy from a premium and buy from a discount and sell from a premium, sorry. So in this from this range, you can see this is the last dark candle before price did what absolutely took this high. So this is the last down movement before price took this high. So I will actually refer this in to a range from this low to this high. And now when price did that, you can see the equilibrium of it is in this fair value gap. So all you can do is get your trade ready, your idea ready, and go into this trade from this point. We can see it in 15 minutes time frame, clearly seen here. Traded back down, can put it here, traded back down, respected this order block, and it bought back up. All these happen in the fair value gap. If you look into this, you will see a fair value gap here, and if you are not very careful, you just get to take the wrong institutional reference points to get into the market. So you can see here, this fair value gap isn't down, it's not really wrong, but at the end of the day, it had to come down to this order block. You can see these highs, they were all taken, and this one as well. So looking at this situation, this is the best time to buy, and to this point to at least take out this high. And to me, if I traded this, I would have traded this as buy from here, and equilibrium at the low here, and then my TP definitely at this point. Do you know why? This is a good ratio 1 to 2 because of this order block here. Yes, I want to see price go up a little bit, but I'm not going to risk myself because I am seeing this order block here. This is where I'm just going to take my trade and absolutely get out of it. You can see at this point it's towards the early hours of New York section. This happened in the key zone of the New York section in the morning. So definitely trade to this point, which is from 8 to 10. Good risk to reward, and I'm out of the market. We can go down to 15 minutes time frame to see if we can get a better read on price to get out as well. Yeah, there is an OB here as well, but would I have trusted this? No, I definitely would have just taken my trade from here or put my stop loss here, definitely, because this is the low of the order block really, and it's a very good risk to reward, and boom, I'm out of the market. So trading, doing key zone, you can see traded back in the morning hours, touched the order block and it did what? And it bought. So the key zone for New York section is always within 7:30 to 9:30. You've got to wait for price to give you good read, good discount, good premium before you buy or you sell. So this is how I would have traded the market. Not too greedy. I really do not care. This is a good point, but I really do not care. I don't want to be too greedy. Now, if you had missed that move, I won't advise for anyone to trade. And this is the afternoon session. I really don't trade the afternoon session of New York from the 1 o'clock to I think 2:30, 3 o'clock. Yeah, those are the time to trade the New York session. And you can see the fair value gap here. Price came back down, traded up. You can see when this high was taken, it formed the fair value gap, danced up, came and eventually came back down. So that is the afternoon session, trading back into the fair value gap, knowing fully well we have a high to take. So this would have been a very good point for you to at least spot. You can see you can see how difficult it was. We were already getting into the evening time, and that was it. Trade ended. So what am I wanting to see? The 1 hour session, you can see price bought from this particular fair value gap now. Sorry. So I want to see, we can also check again now. Let's see something very, very critical. From this low to this high, you can see price came to equilibrium and started buying. Now equilibrium is also a good fair value, a good place to buy or sell. But if you have a very good you can see this fair value gap is at the equilibrium, so it's actually very nice. It came to equilibrium. It's a good point to buy as well. So price came to the equilibrium, touched it, and it started buying. And what can we see here? It's not really difficult, right? We can see price eventually coming up to take this high. This is the first one to take. This buy side to be blown out tomorrow during the New York session. Get into this actual fair value gap, and then we see how that's the daily, right? I think it's the daily, right? Yeah, the daily fair value gap has highlighted. To be frank, I think price is coming up to a good premium before we sell, but to what point I really do not know. I can't see, but I really wish I can see this high to be taken, but what I think to this point here, so we can be bullish tomorrow on gold, but where am I very comfortable to see price get to? From here, you can watch to see price buy up to this point here. and that is it for me. So if that happens, there could be an consolidation for price. It depends on what the news outlet is for tomorrow. I have no idea what the time or what price is for tomorrow, but when it starts, we have news. I'll show you the red folder news, then yeah, we can really identify to see where price really push out to. So yeah, that is, I'm not a teacher, so that's why I'm not a good teacher. So my voice or the way I present my video may not be interesting to you, but I'm not here to teach. I'm just here to show where I am wanting to see price to get to, and what I can see in the market at the moment. But this is Sunday. Price is about to, the market is about to open. We can see, and then we'll start seeing price movement. But 1 hour, this is where I want to see price get to this point, and then if you can see a downside movement. But let's not be deceived. This high as well is quite very interesting to notify. I'll put it on a green. Points to watch. I just put it at top. Yeah, points to watch. Let's see how price get up here. So what else? There's nothing here. This is just my analysis on gold and gold movement for tomorrow. I just want to see it get to this point, and then we sell. With that being said, so the weekly, yeah, a point to watch is around here, because I just want to see price. This is equilibrium, and this is good. Yeah, exactly. This is 0.62, and this is a good fair value. A good fair value for sales. So I really do not mind for price to get up to this point. It's the point to watch. This is equilibrium. So I'm just going to watch this point. So let's see how it looks like in the weekly chart. Yeah. Okay. So all right. So just want to watch this point here. You can see price. You can see the equilibrium is at this other block as well. We can definitely get to see a candle wick, and the wick of a candle, and then price closes below the other block. If price closes above the other block, then this is a point to watch. If a candlestick closes above this line, above the equilibrium, above the other block here, or rather inside the other block here, around this point, then I want to see and watch price get up to this point, and then we sell. First of all, I'm not the owner of the market. I don't control the algorithm of the market, but my honest watch on price and look on price, that is what I can see at the moment. Otherwise, we learn as we go forward. So thank you for today. Till next time, goodbye.